All right, so thank you very much to all of you for joining us. My name is Eleni Jarkos. I'm a correspondent and anchor for CNN International. Delighted to be joining you today, and welcome to this Africa CEO Forum webinar in partnership with the International Finance Corporation. Our theme today, Africanizing green infrastructure projects. Please use the hashtag, get your insights, get your thoughts, share on social media some of the insights you hear today. The hashtag is ACF Digital Events. So a little bit more information on our topic today. We know that Africa's infrastructure gap is estimated to hit a whopping $51 billion in 2021, and investors are calling for more stringent infrastructure sustainability guidelines, and the amount of green financing available has also dramatically increased. We know the sustainable bond market is creating a lot of excitement. Banks are starting to create sustainability and green funds, and we know the bond market specifically has increased from $800 billion in 2019 to over $1.3 trillion in 2020. So sustainability strategies are key to bridging the infrastructure gap. We'll be exploring those themes. And then importantly, what kind of policy and regulation is being decided upon when it comes to green infrastructure on a global level that Africa needs to then, sort of retrofit its plans and its projects into. But what about Africanizing projects? How do we make those relevant for the continent, while at the same time we embark on our industrialization path, and of course ensuring that every person on the continent has access to electricity? So what does that mean for fossil fuels? What does it mean for future projects? And how do we make sure we create a greener industrialization for Africa? So we'll be taking your questions. You're welcome to start chatting with us in the Q&A section box on your screen. We also have a few polls planned for you, so please look out for those. We'd love to hear your thoughts. And of course, the key questions that we will be endeavoring to answer. In terms of green energy projects on the continent, why still so few? Governance, regulation, and the framework. Is there a winning formula? And infrastructure deficit? Can green infrastructure fill in the gap? So joining us today, we have special guests that will be interjecting in the panel discussion. We've got Uche Orji, Managing Director and CEO for the Nigerian Sovereign Investment Authority, Binta Bari, Future Energy Leader, World Energy Council, and finance lawyer. For our panel discussion, we will be joined by Linda Munyen Geterwa, Regional Industry Director for Infrastructure, Middle East and Africa at the International Finance Corporation, Nicole Poindexter, founder and CEO of Energicity Corporation, and then Yusuf Rusi, Deputy General Manager of Ati Jariwafa Bank. And to start the session, we have our expert voice who will be setting the scene and giving us context before we kick off our panel discussion. I'd like to welcome Mokena Makeka, Principal at Dalberg Advisors. Sir, over to you.
Thank you so much, and welcome to everybody who's attending this quite auspicious meeting. I will try and bed down a couple of core ideas to bind the conversation together and give some context in terms of the importance of green infrastructure, but the specifics that make Africa unique in terms of this global condition. Next slide. One slide back. Thank you. A core part of what would make the solutions with regards to infrastructure in Africa critical is the understanding that there's two key points. One is the transition from gray to green for all of the reasons that we all understand, relating to climate change, relating to better impacts in terms of the environment, as well as supporting social and economic development. But most importantly, this triggers ideas around a new social compact for smart infrastructure. And what we mean by that is the continuum or the relationship between infrastructure companies and societies that they serve and how they can participate in the making of better environments. Next slide. The challenge is fairly substantial, and I'm sure you're all familiar with the Paris Climate Agreement and the sort of challenges that we face there. It is important to also highlight that these ideas and impetus do not remain in the theoretical realm. In just the last 2 days, two hydrocarbon giants have faced significant change, one at board level, another one in terms of being held to account in terms of the climate agreements with regards to reaching net zero by 2050. In short, by 2050, we have to get to a point we're looking at a 6.2 gigaton production of carbon, which is a reduction from 54 gigatons, which you would argue would be the figures at 2019. This has a huge implication for how we think about green infrastructure, how we get to a point of net zero. But if you look at the diagram on the right hand, which is about the microgrid system controller, this is the idea that how do we take these large scale figures, make them palatable, make them consumable by societies, and make it in such a way that these infrastructures can actually be deployed in a coherent sort of manner. Next slide, please. Most of the energy demand currently is met by biomass and fossil fuels. This has a huge implication for the targets that we're attempting to reach, but also in terms of household dynamics. The average household is using between 30, if not 39% of its energy with regards to heating and cooking, etc. And these are the sort of challenges that we face. So how do the cities of the future begin to address these sorts of needs without tapping into biomass or fossil fuels? And quite importantly, Africa is still on a developmental and industrialization path. So the challenge that we're facing as a continent is how do we meet our industrial and developmental challenges whilst at the same time having a reduced impact on the environment? Next slide, please. Solar energy remains marginal, but it attracts a number of investments, and there are large parts of the continent which are underutilized in terms of the solar energy potential. However, there are a whole suite of options that are out there that have to be scaled up, that have to be engaged with local communities, and that have to be deployed in such a way that the energy mix, if you will, begins to respond to the specificity of place, local resources, talent, and skills in different locations. Next slide, please. So here are the key takeaways that I wanted to land with the audience for us to consider. The one is that Africa's youth bulge and women entrepreneurial base are an untapped strategic resource and dividend. It is critical that if there's any sort of approach with regards to infrastructure, that you begin to consider this dividend as part of the equation of delivery. Microgrids also allow for resilience and local engagement. And what we mean by that is gone are the old days of large-scale infrastructure that support megacities, but it's much more about what is the smallest possible size of unit that can respond to a community, that can be easily repaired, that can offer different forms of access, as well as entrepreneurial penetration. The right to repair is also quite important. Infrastructure has to be considered or imagined in ways in which local populations can be skilled not only to maintain that infrastructure, but that also those skills remain and rotate within the community. So the infrastructure provision doesn't just become an energy argument, but it actually becomes a skills transfer debate. And my last 2 points relate to urban development. Africa is on a rapid rise. We're probably, in terms of population demographic deltas or changes, if you will, probably experiencing the highest amount of urban change in terms of urban developmental growth. This is placing a huge pressure in terms of how our cities grow, how we imagine our buildings, how we imagine the whole range of gamut of infrastructure requirements in order for us to deal with our populations. So it's important to understand that there's a continuum between how we manage urban development, land use planning, as well as the infrastructure response and therefore the microgrids. And lastly, to also indicate that there is a demand. Sometimes in these debates, these figures sit isolated from the question of is there demand. The business as usual scenario is untenable. There is a desire for change, but it does mean that there's a potential for new partnerships and social compacts that can be imagined around the provision of green infrastructure to support these societies. So when you connect them with impact, when we connect them with society, when we connect them to the ESG values, which are beginning to permeate across a whole range of corporate governance boardrooms in terms of energy and developmental provision, there is a potential for a new form of partnership. And I wanted to thank you all for this opportunity to share those thoughts on behalf of the continent, and I yield the floor.
Thank you so very much. Truly fascinating. And I think what really hit home for me is, you know, where we are in terms of industrialization, where we need to be going, and just how much work needs to be done. We're in a totally different developmental stage to other countries. So thank you very much for that, Mokena, much appreciated. So no surprise that we do have a record number of attendees and registrations for today. So we would like to know why you are listening in to this conversation and what you'd like to get out of it. So we're going to start with our first poll. And our question is, why draw your interest to attend this webinar? and you look at the options. I work in the energy sector. I want to invest in renewable energy projects in Africa. I'm interested in Africanizing approach of green infrastructure. I'm interested in climate change issues. So please submit your answer, and then we will be getting to that a little later. So we now begin our panel, and of course, we were, of course, alluding to the fact that when it comes to projects and green projects on the continent, we have to make sure that they work in the African context. So they need to be adapted for this environment, as opposed to try and retrofit what is happening in the rest of the world to work for the continent. So Linda, I'd like to start off with you, and you're with International Finance Corporation, heading up infrastructure for Middle East and Africa. So when we say we want to Africanize green energy, how should green power infrastructure be adapted to meet Africa's needs? And the reality is that we have many projects on the go, but very few reach financial close. So I guess there's a question why we have interest, but why we can't actually have financial close on a lot of the projects that we've been seeing.
Thank you so much, Aline, and welcome to everybody, and thanks for having me on this panel. So maybe let me start with why projects are struggling. And I think it's really not peculiar to green projects, right? When we started this, your opening remarks were about the fact that we are facing a $51 infra gap, which means that whether you're talking about grey infra or you're talking about green, clean energy, it doesn't really matter. The fact is we're not able to actually bring projects to close. And there are a few issues that I think are important to sort of to put on the table as impediments to closing infrastructure projects. So the first one, in my view, is that we have deficiencies in legal, regulatory, and institutional frameworks. These are important for transparent pricing and tariffs and PPP frameworks. So if we actually don't fix the regulatory environment, we'll find that a lot of our projects will not reach the finish line. They will stumble along the way, either because the regulatory environment is not accommodating them, or there are issues that preclude them from going forward from a legal perspective. I think the other issue is also inadequate planning. So we've seen in a lot of cases where there's no planning. If I take the energy sector, for example, there's no system planning. So everybody comes with their own project, and it's all done in an ad hoc manner. That results in projects where there's no proper price discovery of projects, and you can actually end up with stranded assets or very expensive assets, which is, creates a problem for the governments, right? Because now the utilities are having to absorb these expensive projects, and it's not sustainable. Capacity and skill are also a big issue. We need to work on that. Mokena spoke about the fact that we have a young population. We need to train them up and skill them up to actually be ready to implement these projects. Governance issues, I'm not going to go into the details on that. I think everybody knows what I'm talking about. And then, of course, when you're talking about the specific context of Africa, we've got macro and sector issues. We've got FX convertibility issues. So we need to find a way to actually bring local currency to finance infrastructure projects, because for as long as we're using FX, we are going to have convertibility issues. We're going to have issues where investors are not able to move their funds or at least realize their investments. So those are just a few of the issues in terms of what is stopping projects from going forward. And then maybe to answer your question specifically on how do we Africanize infrastructure projects, I think it's not a one-size-fits-all. So we need to be careful not to import what's been done elsewhere without taking into context what's actually happening in Africa. So for example, and again, I stick with the energy sector because I think that's what everybody's pretty familiar with. If we look at the energy systems, I think the mantra these days is that we need to deploy renewable and wind energy across the continent, and we can power the entire continent purely on RE. That's a misconception. I think we need to see what we have in our toolbox and how to best deploy it in a manner that is sustainable, that supports greening the environment. So if you look, for example, we're talking about urbanization. There's massive urbanization, which means that the traditional grid remains important, but we also have a huge population that's in the rural areas, which means that microgrids are also quite important. So how do we make sure we mix up the differences to cater for the specifics of our different regions? I think that is important. We also need to just think about, let's also remember, Africa is already 50% RE. So we don't really have an RE problem. in energy, we're only contributing 0.5% of the CO2 emissions. So we're not actually generating a lot of CO2. So let's think about how do we then use hydro energy, use gas, use renewable energy to make sure that we deliver the resources that are required for our people. Thanks.
Thank you so much for that. And you're so right. You know, Africa right now is, you know, not a big contributor when it comes to carbon emissions, but as it industrializes and as we start to see, you know, the use of more fossil fuels, that is going to change. And the continent, of course, is experiencing massive climate change issues as well. So, Yusuf, I know that it's been such an important talking point in the banking sector, and a lot of money is chasing greener projects and sustainable projects. But I'm hearing this from many CEOs. There just aren't enough bankable projects at this point in time. It speaks to what Linda is saying right now. So when we, as a banker, as the, you know, you hold the purse strings, how do we Africanize projects for you to want to invest in? What are you seeing? Where are the gaps that are coming through? I know that Egypt, Morocco, and South Africa have done really well with wind and hydro and solar, but there's still so much room for the rest of the continent to grow.
Well, thank you very much, Eleni. Thank you very much for inviting me to this event and to give the opportunity to share the experience of Tijari Wafa Bank as a commercial bank, as a Pan-African bank in the field of energy transition and climate change. Like you have said, actually, we are facing a massive paradox in the continent. Actually, the continent contains the largest natural resources at scale, whether wind, hydro, solar, and geothermal, and they account for the main bulk of the production. But at the same time, 600 million Africans simply don't get access to electricity. So the challenge is not so much to migrate from coal to renewable. It's really to build the capacity, knowing that the urbanization is growing and the population will double over the next years. So the challenge is really to put ahead the capacity to build viable projects and bankable projects. And from our perspective as a Pan-African bank, Morocco was an interesting benchmark where a large capacity in the area of green project finance have been deployed over the 20 last years, thanks to a double factor, which one, it is the governance framework and regulation which Linda put ahead, and which was very important in order to give the visibility and the vision to all the sponsors. The other thing is the financial sector that has implemented capabilities in the project finance area with appropriate structures in terms of size, tenor, and rates. Now, the question is absolutely crucial. How can we do more? How can we Africanize green infrastructure? Well, first, maybe the project finance to a large scale renewable energy and green projects is a key driver. How can we do more in the project finance area? In our case, as a Tijari Wafa Bank, we have committed to financing green projects for over 1 billion euro over the last 10 years and 1,700 megawatts in terms of renewables. We've financed many projects in wind farms or hydro with many sponsors, Moroccan ones or international ones like NG or NL for hundreds of megawatts in Morocco. And we've done it through local currency schemes or syndications. But of course, the more important challenge is to get the appropriate governance, the regulation, as Linda put ahead, the availability of grids, and the appropriate scheme in terms of IPP, with the viable off-takers, sponsors, response from the banking and financial sectors. The other thing maybe is specific to our continent is the question of risk perception and the couple between risk and return perception in Africa. This is one of the main issues we are facing on the continent. And what we've seen is that in some cases, syndication can help. One of the last projects we financed in Cameroon was the hydro projects of 400 megawatts of Nachtigal. We've done it through a syndication with 14 banks, local banks, international banks, both in local and foreign currencies. So syndication may add some specific capacity. And the third factor is really the access to long-term liquidity, because in many cases, we see that the maturity issue is key, given that commercial banks in sub-Saharan Africa, due to specific regulations, are often enabled to finance projects at maturities exceeding 10 to 12 years. So how to access to maturities that can fit the specifics of the project finance areas. This is where accreditations like Green Climate Fund, in which we are accredited as a commercial bank. So it enables us to channel concessional loans to Africa, and syndications can also help address this challenge of the maturity. And finally, the last point I would like to make is that we need also diversification of funding. Beyond banking, we need also capital markets, and to improve fiscal reforms that can channel domestic capital, African capital, to finance project finance. And so this is also key to give more space to project finance and to financing specifically local projects in the continent.
Thank you, Yusuf. Truly fascinating. And, something, when we're talking about offtake agreements, it's so vital because, if big renewable energy projects want to plug into power utilities on the continent, that's when you need the regulation, you need the solutions, you need the right contracts, you need the relationships. And Nicole, you're smiling. You're up next. You're in microgrids. So you're going, listen, I'm going to circumvent this whole power utility issue, and I'm going to bring electricity directly to communities that need it most. And I wonder, because I've heard this before, should we just completely do away with, focusing on power utilities and base loads and just go microgrid solutions across the continent? You've been focusing on this. Do you think that would be the definition of Africanizing energy projects on the continent?
I would say, so one, it's a fascinating conversation so far, and I really appreciate being part of it. I wouldn't say that microgrids are the solution to everything, but I do think that what is unique about the African context is the fact that there are so many people who are disconnected from the grid. And, Africa doesn't just have a generation gap. It has a distribution gap. There's not enough distribution technology. And what microgrids do is they solve that problem. And so do I think that microgrids are the sole solution? No, we've got urbanizing communities. We've got hugely dense populations in some places. But do I think microgrids are a considerable part of the mix? And quite frankly, the 600 million people without electricity, is that probably the solution for a good half of them? Yes, I would say that is most likely.
Fantastic, great. I've got the poll results. So we sort of took a questionnaire to see why you're joining us today and why we have record numbers. And here are the answers. So why did you join? You work in the sector, 19%. The biggest portion of you are interested in Africanizing green infrastructure and the approach we should be taking. So fascinating to see what you're interested in. I see lots of questions coming through in the Q&A box. I'll be tackling those in just a moment, but it's time to go to our special guest who is now joining us. It is Uche RG, Managing Director and CEO of the Nigeria Sovereign Investment Authority. So great to have you with us. Thank you so very much for joining us today. I look at the Nigerian context, and if there were ever a country that would need to start really thinking about transition, Nigeria is one of those examples. Whether it's the man on the street or the informal trader on the street or big companies and corporates, you hear the sound of generators in big cities like Lagos. So when you are sitting with a sovereign investment capacity, where do you put your money? Tell us about what you're doing right now, how much you have available to invest in this sector, and are you thinking about the transition? So are you there?
Can you hear me now?
Yes, I can. Welcome. Good to see you.
Good to see you as well, and thank you very much. And good to see Nicole. I think last time we saw each other was at business school. That was over 20 years ago. To see you again.
You both look so young. Would never have said 20 years ago.
Now listen, thank you very much for this. And I want to thank the organizers for putting this together. I think the topic of Africanizing green infrastructure is something that we have spent a lot of time thinking about. On the one hand, you want to convince African countries who are resource rich in oil and gas that this is not an attack on their source of livelihood. Which I think is very important in messaging, so that you actually can win their trust in achieving this. And also, you need to think about it holistically. Climate change effect is caused on one hand by greenhouse gas emission, but also in Africa, and a clear and present danger for Africa today is desertification and deforestation. And I think the solution that one must prescribe must address all of the above. And we've spent some time recently to actually think about what is it that is really, I mean, we're not on an industrial scale in any way. So when you talk about emissions, even the generators we talk about are all very interesting, but they're not really on any huge scale, quite frankly, in terms of greenhouse gas emission. We spent some time actually over the last 3 years, thinking about how to solve this. And so this is what we're looking to do. On the one hand, I totally subscribe to the idea of mini grids and microgrids. The national grid system isn't very effective, wasn't really built well. So there's no point recreating that anyway. It's too expensive, it's old technology. We can deliver power to multiple homes in terms of people in the villages or people in the small towns through micro and mini grids. And we are currently in advanced development of one of such projects. Our first test project is in a city called Kano. It's actually the largest or the second largest by population in Nigeria. So we're building a 10 megawatt mini grid system for industrial parks. Let's see how that works, right? And then we have a plan. We're actually working with the IFC to actually see how we can roll that out across various parts of the country. So that's the first solution. The second thing we're looking at, and I think if that works, and I hope it works, and I'm more confident it will work only because the cost to generate a kilowatt hour of power is almost at parity with solar panels and close to what we can do with gas. So instead of recreating an archaic grid technology, let's just go mini grids and microgrids, and that's the first thing we're doing. The second thing we're doing is providing solar home systems. We're working on this as well now, and quite frankly, there's a tie-up with industrialization. And what do I mean by that? We're trying to get people to actually assemble these solar home systems in Nigeria, build skills for maintenance, and eventually someday be able to manufacture some of these components. Obviously, making the panels themselves is very difficult because that's semiconductors and it's really huge in terms of the cost required to build this. So our view is that we can actually start to create that level of capacity internally. But away from all of this is actually how do we reforest? How do we stop the desertification? And this is where I think we're doing something that is probably an Africa-specific solution. Here's what we're doing. We believe that the deforestation is caused by two things. It's caused by people actually using biomass to cook. So they're cutting down trees to use as firewood. So how do you stop that? I think one effective solution for addressing that is actually using gas that is fled in Nigeria today, turn that to LPG and send small cooking stoves to people's homes as a way to stop them from cutting the trees and eating the environment. So these are some of the things we're looking at in terms of how we spend time and how we spend our money. But quite frankly, for Africa, the issue of climate change, greenhouse gas emission is a massive issue. And I think that's because we're actually more affected by it than we are causing it.
So Usha, I mean, you've mentioned so many fascinating points here. I guess, I mean, very simply, how much money can you allocate to this sector when the whole continent's priority right now is healthcare and, of course, getting through this pandemic? It almost feels like when it comes to, green infrastructure, that it's not a priority like it used to be, even though the sustainable development goals are still very much, there, and the targets that we set have not disappeared.
No, I will put it this way. I mean, we're not a big sovereign wealth fund. When we make investments, we actually use them to show for catalytic effect and to show a solution that can work. So we're putting not a huge amount of money. I think at the moment we're allocating, and there are a couple of things that are happening. There's a co-investment fund we're about to create, and I just can't disclose with whom yet, but this investor is European based, and they're bringing 4 times the capital we're bringing. And that's because also we can wrap a whole carbon credit around it and make it more profitable for their business. And that's just a small pool of fund of $100 million. And that is called an ESG fund, but we're addressing this issue of cooking stoves. Within the NSI itself, we have about $1 billion for infrastructure, and I think we're probably going to spend something in the order of 20% of that on power. And we are looking at using all kinds of neat solutions to make sure that these grid systems work. We've just signed a deal with Connexa to do an enhanced mini grid system within this kind of city as well. So we don't have a huge amount of money, but we're hoping that if we can prove a solution, then we can catalyze and then leverage capital from outside the country to make it work.
So, which I mean, the other thing that we're thinking about when it comes to Nigeria, because we have to industrialize, right? So we've got to think about processing plants, and I get you on the gas flaring. Oil companies need to be thinking very differently. What about the regulatory environment where even oil companies are going to be thinking about transitioning, even in a country like Nigeria? And even though the aim is to refine oil in Nigeria and to, you know, utilize our fossil fuels more effectively, like how do these themes marry each other, where investors that are joining us today are going, okay, Nigeria is a country I want to invest in because they're really thinking about this and they're going to have regulations that are going to benefit and incentivize us?
Sure. No, I think we need to be a bit pragmatic about it, right? Every country would like to leverage its natural resources to the best possible effect. So if Nigeria believes that by processing gas and using gas, it's actually able to achieve an economically better outcome than having to install massive solar farms across the country, why not? And I think this is where I think it starts to get very, getting to the second and third derivatives of the solution, right? So to use a one-size-fits-all solution, it isn't really right, and neither is it fair, to be honest. And I'm going to speak now from an African perspective about this. You know, why will we spend a lot of money and buy huge expensive equipment when it's cheaper for us to actually use gas that is in the ground? We're not really making a big dent on the entire greenhouse gas emission challenges in the world. So if people are not investing in it and Africans have a solution and are able to extract that, we can't just throw that away. It's a cost-effective solution for them and must be considered. Now, it's a question of whether the guy sitting in Boston or New York or London decides whether he allocates capital to it or not. That's a separate conversation we need to have, but we must have a broad conversation about it. Second thing I want to say is, look, I recognize that the G7 or the G20s recognize gas as a transition source of power. That's great, because I think we need to define what that transition really means and what it means for Africans. You know, the leapfrog effect is great, but not when the cost is significantly higher than using your natural resources. So a balanced conversation needs to be had about this. And I think coming up to COP26, the Africans are going to listen. So let's have a proper conversation about this. There are parts of Africa where, and I believe for probably the majority part of Nigeria, solar is the right solution. And it's not because we want to solve the greenhouse gas issues, because it's the right thing for us to do. And I think that's the one way to understand that. And I think that way appeals to the government to work with us on some of these issues. Regulations, and I think regulations are catching up. And honestly, I think recently there is a lot more talk within Nigeria. I can only speak for Nigeria, I can't speak for the rest of Africa, about how do we provide solutions and regulatory environments that encourages people to invest in the country. It's not straightforward, it's not so easy, but the fact that we're talking about it and working on it is actually a good thing. And I'm hoping that we're actually going to come up with something before COP26 in the UK about a whole, some regulatory environment around these issues.
Look, we know that if Nigeria is on board with something on the continent, then, you know, you can set the tone for the rest of Africa. So Uche, thank you very much for your time. Thank you for joining us. And I hope to visit Lagos soon again. I haven't been there since just before the pandemic. So I'm hoping the world is going to change soon. Thank you, sir. Good to have you on.
Yeah, we welcome you when you come, Melanie. Thank you so much.
Thank you. Thank you so much. All right, that was truly fascinating. And we're going to go to our second poll today. So I want you to take a look at your screen now. We're going to launch another poll where we'd like for you to give us your thoughts. In your view, what is the biggest obstacle to green infrastructure in Africa? Securing project financing, that's too difficult. Regulations are not adapted. The limited size of the projects, lack of interest in green infrastructure compared to grey, complexity of the requirements for financing green infrastructure, or there is no insurmountable obstacle. So please type in your answer and I'll get to those results in just a short while. So Linda, do you have examples of green infrastructure projects that would be a good model to replicate, especially for a country like Nigeria? Like we've heard, lots of fossil fuels, we have them available. How do you strike that balance, and what examples could you share with us?
Absolutely. So if I look at the Nigeria specific issue, we're actually working on a project right now in Mozambique that is a gas IPP. So, and again, you know, we've looked at this from a transition perspective, because obviously everybody's taking into account the whole issue of what is our contribution to clean energy. And you know, we did the maths and basically said, if we were to replicate this project 50 times over across Africa, the contribution to emissions would still be negligible. So I think there is room for countries like Nigeria to tap into their resources and to perhaps put up, some amount of gas-fired energy. And the reason why we're talking about gas as green transition is because it's better than coal. So nobody's touching coal right now because that is really bad. But I think if you look at the level of emissions from gas, that is somewhat manageable. And I think the technology is also advancing enough to make gas not clean, but acceptable. Now, if you take that and you mix it up with renewable energy, then I think you now start talking about getting good energy mixes in a country. And I think that's what Uche was actually alluding to, that you may actually deploy a solar plant in one area of the country, and that makes sense. But sometimes it may not make sense in a specific space. Let me also give you an example. If you try and put solar at scale in the middle of a city, and you're trying to connect it to the grid, you're probably going to fail, because you have to take into account energy systems and how they absorb renewable energy and the intermittency of renewable energy, because you're not getting renewable energy 24/7. So if you're going to do electrification with purely 100% RE, that means you've got to deploy massive batteries for storage, and that's expensive. So how do you balance the equation out? I think that's what's important. So for us, the project that we're doing in Mozambique right now, which is a gas-fired power project, is a good example. We've done solar projects also across the board, and pretty much all of them are, sort of adaptable. And then of course, like I said, earlier on, it's about mixing the different resources that we have. So hydro is actually a renewable energy that we don't speak a lot about. We're doing a massive project in Malawi right now. So really getting to the development. I think Yusuf was speaking earlier on about there not being bankable projects. So this is where we are coming in and saying, okay, if there are no bankable projects, we are going to get right in there and help develop those bankable projects and bring them to market. So Mpatamanga hydropower in Malawi is one such example.
Fantastic. That's a really interesting example you shared with us. And Nicole, I want you to jump in here. I think, because you've got such experience in the mini grid system, I want to talk about financing, funding, offtake agreements, and how you get around these issues, and whether you found that you needed to change your model coming into the continent and the way that you set up these micro grids.
So just for those who might not know what a microgrid is, it's a solar system combined with batteries, poles and wires to take electricity to each individual home. It is distributed. So we have one community-based system in one community, and then another community that might be 5 miles away, might be 50 miles away. We have another community with the similar system sized for the needs of that community. So one key part is that we're not connected to the grid. So we don't actually have an off-taker relationship with the national grids. Our customers are rural people who are farmers during the day, and they get electricity at night from us like they would from their utility anywhere else. What we find the challenges on, the biggest challenge we have, and I think for many grids broadly speaking, it's twofold, but the key one is financing. And it is reaching financing sources that understand and are comfortable with a rural customer. That actually is, and a rural African customer, that is actually probably the biggest obstacle I see to raising funds. Regulatory environments that are designed and actually understand the unique nature of mini grids. And then within that, there is a particular, I'll say, challenge around tariffs. When you think about tariffs or these unique mini grids, they are at the margin higher cost electricity system. I say at the margin for two reasons. When you compare mini grids, and the World Bank did a study on this a couple of years ago, when you compare mini grids to the true cost of power in most African countries, mini grids are actually cost competitive. Might be a little higher, oftentimes a little lower. But the difference is that governments will subsidize the power on the main grid, usually because it's a nationally owned utility. And so that creates a tariff differential, which can be hard to manage, creates some regulatory distortions. That is a great concern for many investors. So I would say the financing challenges, but those financing challenges sit on top of a set of other operational challenges that are the biggest challenges for mini grids. But we think it's a really viable way to deliver power, and we're growing rapidly and able to provide power to more and more communities using this technology.
We have so many questions from the audience, and I'm going to take some of them because I fear that we're not going to have enough time at the end. And Yusuf, I'm going to ask you one question from Musaope Mtamba. Why is bankability always around conventional models and thinking? Isn't there a way to measure or determine bankability, especially in the African perspective? Like, look, you mentioned risk. You mentioned perceptions of risks. We know that capital is a lot more expensive on the continent. And here we're saying we need to change those perceptions, or like, rethink the risk model. You're a banker. There's no one more prudent on perhaps Linda, but there's no one more prudent on the panel, I would say. So tell me, can we rethink the bankability model?
Yeah, well, thank you for this very crucial question. Actually, as a bank, we are looking to the conditions of bankability, which include the quality of sponsors, of developers, the legal framework, the governance scheme, the quality of the off-taker. You have all the criteria that go into this. This is the general pattern of risk assessment, but there are specific patterns in the continent related to the capacity of the local actors, mainly in terms of maturity, in terms of size, in terms of currency. So what we're trying to do, depending on the countries, is to adapt really every project to the specifics of every country. Let's take Morocco, for instance. In Morocco, you have a banking system that is able to finance 20 years tenor on a single project finance scheme. So we've financed, as a bank, 1,700 megawatts in wind farms on maturities going between 20 to 20 years, with syndication that is done among Moroccan banks, in some cases with international banks, with a good viability project, good return, and good viability on the large scale. You got some specifics concerning the solar system. In Morocco, you've got the Moroccan solar energy that started and enhanced a very major project in the solar, but with kind of subsidy, with the Moroccan solar energy that gets some subsidies that is injected into the project to get the tariffs viable and the return correct for the investor in order to scale up. In sub-Saharan Africa, with another equation that is available, local banks don't finance above 10 years, so we try to get syndication. We try to get into large syndication with IFC, with multilateral banks. We try to onboard with the Green Climate Fund to channel concessional loans into the projects to get projects done. I spoke about hydroelectric project of 400 megawatts in Cameroon with Nachtigal. It was done, a long-term tenor. It was bankable and viable, and the risk was taken. We've done other projects in Egypt, and I can give some other projects. So there are conditions of viability, but we are trying to adapt mainly the maturity, the mix between the local and the foreign currency, and to get more actors, because you got some issues regarding the size of the balance sheet of the banks in some countries. And you get to negotiate the appropriate off-taking and IPP project with the off-taker. It takes time. There is not only financing, there is also the structuring phase of the project to get the projects to the market. And this is one of the issues. We've got the two issues to solve all together. And that's why syndication, and we need more actors to combine their effort on the ground to get projects done. But we have the overall picture is that we got, as a bank, financing projects in Northern Africa, Egypt or Tunisia, in Central Africa, and even in Western Africa, in Ivory Coast or Senegal, with hydro projects or solar projects, for instance. So it's possible.
Perfect. Linda, if I could bring you in here with the question we've got from Erin Ansel, how can private sector financing, which presumably expects a return on investment, so in other words, profit, reasonably expected to help Africa close the infrastructure gap, especially in electrification, when the fact of the matter is so many potential consumers are among the most poor? I mean, look, the crux of the question is something I also wanted to ask. The cost of electricity, we know you need your margins, investors need to walk away with something. How do you manage this in an environment where you're starting from scratch in many of these countries?
So I think the first thing comes back to what I said earlier on, which is about the regulatory environment and the policies and the capacity building and the planning. So if you actually don't have planning in a country, you will do projects on an ad hoc basis, which means that you've got no control in terms of what tariff you command for your plant. A developer will come and say, I'm going to build you a solar plant and I'm going to charge 19 cents per kilowatt hour, and you're a taker. But if you actually put it out there to tender, that's one way of making sure that you get the best price, and you make sure that you get the best, not only just in terms of price, because the other issue that affects us is the ability to deliver projects to completion. So if you are having a developer that's coming to you, offering you a project, and they're not able to actually deliver that project because they don't have the capability, that factors into the price. And like I said, and we're talking here in terms of a grid system. I think ultimately what's important is the planning. How are we going to electrify our country, and what are the resources that we have? And so basically what we say for each country is that you need to have a least cost plan. And that can be a mixture of sources of energy. So if you take a country, for example, will they deploy hydro first, and then they will do solar, then they will do wind, and then they will do HFO, because maybe that's what they need to close their gap. There needs to be a plan in terms of what is the hierarchy of the project, so what is the order in which I'm going to deploy projects, because if you have that, then that ultimately enables you to manage your tariff. If you're going to do a lot of projects that are feeding into a system at a high price, that's going to result in tariffs that are not affordable. And then we come back to the distributed energy. That plays an important part in how we're going to electrify our communities, right? So again, I think it comes back to, we have to have the regulatory environment that enables the deployment of these distributed systems, because without the environment, your risk factors go up. And when your risk factors go up, the pricing of your loans go up, and therefore that filters all right down to the tariff. So it really all comes back to, let's have the regulation, let's have transparent systems, proper governance, and I think we'll start seeing that, it actually is quite manageable. We've seen countries deploying solar energy, for example, at very manageable tariffs. And I'm not saying that, every African country will be able to command 2 cents as we've seen in other countries. Of course not, because you've got to think about the logistics. You've got to think about, there's a whole host of issues that come into what will be your final tariff. But if you're doing projects on an ad hoc basis without planning, your tariffs are going to be sky high.
Fantastic, Linda. And you're right. Actually, in the South African context, renewable energy projects around 10 years ago were so much more expensive than what they are now. So you actually have this amazing trend downwards. I mean, the question is it now, are the margins high enough for investors to want to come in? I'm going to go to the poll answers very quickly before we continue. If I could just get those results up on my screen, please. Thank you. In your view, what is the biggest obstacle to green infrastructure in Africa? And regulations are not adapted. Basically getting the same percentage as securing project financing is too difficult. Those are the two highest. And then complexity of the requirements for financing green infrastructure. Thank you very much for your contribution there. We're going to go to our next special guest, Binta Barry, a future energy leader, World Energy Council, finance lawyer. Binta, great to have you with us. And just going back to that poll in terms of what our audience members feel that is the biggest obstacle. So obviously financing, regulations, and then looking at the complexity of putting projects together. In your experience as a lawyer, look, it's that final contract that really makes all the difference. What do you see on the ground? What are the biggest challenges that you experience?
Thank you very much for having me first. And I'm really happy to be able to take part in this discussion with the other panelists. I would say that as a project finance lawyer, you are at a strategic position to really understand what are the objectives and constraints of the various parties to project financing. I would say that first, let's not forget that states and governments in general have one principal objective, which is to deliver to their population and businesses a public service. electricity at the most affordable cost for the end user. So this is the starting point. If they don't have the financial means and technical capabilities to design or construct or operate a power plant, they will want to attract private investment. And this, and I will join Linda in this, this will have to be done by setting a clear regulatory framework. The key points being tariffs, procurement rules, and also permitting. I guess that the challenge for states is attracting private sector investment.
Yeah, I mean, look, it's an interesting space because there's excitement, there's money chasing the space, but it's just hard to get it all done. When we preparing for this, you were saying that I believe in green solutions for Africa is optimistic. Why do you say that is?
I guess that let's not forget that we have a climate change imperative. There are discussions in every forum about energy, especially at the World Energy Council. So we, even though Africa is not responsible for what is happening to the planet today, we have to take a leading role in leapfrogging this energy transition. The imperative is to be able to couple electricity access with energy transition. And this is the main challenge today for Africa. And this is why I'm really optimistic, because we know that it's an imperative and we have the capabilities to achieve this.
So when I look at what governments are doing on the continent, they want to increase revenue streams as much as possible, but also think about the future, right? And electrifying people means economic growth. But to what extent would you say that policy and regulation is also chasing this green agenda, as opposed to, you know, other very sort of sectors that increase income streams?
I'll say that we have to engage with states into a comprehensive dialogue.
I mean, are they interested in having the dialogue? Do you think that they're open to it, or are they, you know, looking at the top line cash flow?
I guess that there's been a lot of work done by DFIs on the subject. It's difficult to go to a government and just say, oh, look, you need to change this and this and that. They are sovereign. They have to be able to choose what they put into their laws. But at the same time, any African leader should have electricity access at the top of its political agenda if they want to be re-elected. And there's a population requesting electricity. So I think that this is where dialogue and mutual understanding within the parties can be useful.
Okay, so very quickly, what is Africanizing green infrastructure to you? What does that mean for you?
Africanizing to me is one thing. One key point for me, it's having African capital used to fund African infrastructure. So to me, it's the main idea. How we do that, I think that the participation of local banks is key. They are starting to be, we see them more and more on deals. They have this issue with the regulatory constraints. They cannot lend for long tenors. But we see some DFIs helping in that by providing guarantees for extension of tenors. Stimulating domestic capital markets through the participation of local banks, local currency financing is the way forward for Africa, because at the end of the day, Africa will be developed by Africans and by mobilizing local and African resources.
Binta, thank you very much for joining us. Thank you for your insights and your passion. I appreciate you joining us today. Thank you so much. We're heading into our third poll. Take a look at your screen. Question is coming up right now. Again, just click on the option that is most relevant for you. If we can get that up, please, team. Okay, we don't have the poll up yet, so I'm just going to carry on. Yusuf, I'm going to come to you. Oh, there we go. Can green infrastructure bridge Africa's infrastructure gap? Yes or no? This is going to be an interesting one, I think. Yusuf, we were, in terms of what we were hearing from Benta in terms of the regulatory environment, and regulation has come up quite a bit. Tell me about your experience on how Morocco developed a regulatory environment and the framework that allowed green infrastructure projects to take off.
Yeah, very good question, Eleni. Thank you. This is a very key question, which is at the origin of the takeoff in the energy space, energy renewable space in Morocco. As bankers, we've seen in the late 90s, the very first project finance scheme that has been done. Initially, it wasn't renewable. It was still thermic coal plant, but it was the first way, the first IPP we've seen on the project finance deal that has been done. And Morocco has developed a whole framework in PPP space. You got in 2006 a law on dedicated management of public services that was enacted. There was in 2014 a law on the public and private partnership that was set up. And there was a whole a massive project finance that come up after these laws have been enacted. And so large scale green projects like wind farms in the north of Morocco, in the south, you got the solar energy projects that I had mentioned, etc. So this is for the PPP framework, but you got also another area in the legal framework that has been set, which is specific to green infrastructure. And first, there is the constitution in Morocco that identifies sustainable development as a fundamental right to the citizens, but also you've got the emergence of a national strategy for sustainable development that has been done, and also a national energy strategy, a specific law that encourages the realization and exploitations of facilities for producing electricity from renewable energy sources by private investors. In this specific case, as a private developer, you can sell your electricity to industry through the network. And this is regulated by a specific law on green energy. The third thing I would like to mention is also the involvement of the financial authorities in Morocco. You got the Moroccan Central Bank, which was very active on the topic. They have established the roadmap for the Moroccan banks by aligning local financial system with sustainable development goals and integrating environmental and social risks into the investment decisions of the Moroccan banks. Moreover, the central bank also have authorized many banks in Morocco to develop project finance above the limit of the concentration ratio, because if you take the size of the project, in many cases, you exceed your limit in terms of concentration. And the Moroccan Bank for all the renewable energy had given specific authorizations to go beyond and to get the financing done. And also the financial market authorities have also been involved on the green bond area. As a bank, we have issued the very first green bond for the Moroccan solar energy. It was just a 100 million euro, but it was a start to get the financing down to the central finance. So there is this whole ecosystem in terms of legal framework that has been developed year after year that have made it possible in the case of Morocco, for instance.
Yeah, very interesting. I mean, Nicole, while we wait for regulatory frameworks to come into play on the rest of the continent, people like you are circumventing that and going into microgrids. I guess, what kind of money is chasing you right now? Do you have to chase? What are your experiences? And if you don't mind sharing, what kind of margins are you looking at right now? Because at the end of the day, you've got to build a sustainable business, as well as offer, accessible electricity.
Yeah.
So this is for Nicole. Yusuf? Yeah. For Nicole. Thank you.
Thank you.
Yeah.
So we work with regulators across all of our markets. So we're not really circumventing the regulations. We're just working with a different set of regulations. And I consider our regulators our partners. We are a regulated monopoly. And so one of the things that happens is regulators take a very close look at our tariff and decide that whether or not our tariffs are appropriate for us and appropriate for our communities. From a margin perspective, we are a small business. We're a startup. And so as many startups, we are not yet profitable as a business. However, in the context of our regulated returns, the regulators are allowing us to earn profit over time. So that is a key element for investors. And that is a key part of how our regulators in markets that we are willing to operate in look at our businesses. They are willing to allow us to earn a profit over time. One of the points that keeps coming up in the conversation is about the availability of project finance and what project finance investors need. And just to sort of to double click on that, there is project finance. It is hard to get. Project financiers do not make it easy. And I think that there are some ways to focus and think about risks in a very different way. But I think the real lack is actually corporate finance. It's that these businesses, which might be young, they might be startups, but they're willing to take aggressive actions to move forward, but they don't have the capital to structure projects in a way that makes them bankable for the IFCs of the world, or the major syndications like my panelists are talking about. That said, after several years of searching, we did find an investor. They're based out of California. They're fantastic and super supportive. We're the first African investment that they've ever made. And one of the things that constantly throughout my search for investment, most investors in Europe and United States were really challenged looking at the African market. They said, we love what you're doing, but we can invest in Africa. We just don't understand the markets well enough. So that's a real challenge for small investments. And then I'd say at the project size, one of the big challenges is when you look at the IFCs of the world and the DFIs of the world, they've got billions to invest. For my project in Sierra Leone, we need a couple of $1 million. Wow. And so having these large scale investors who are comfortable with taking project risks in Africa actually look at investments that are right sized for electrification. There's a big disconnect there. Hopefully,
when you tell them, look, we just need a couple of $1 million, are they shocked?
We're now looking at.
Are they shocked when you say, look, I just need a couple of $1 million? We're not talking. Do they get shocked?
No. What they say is we can't do that. That's really what they say is we just can't do that.
That's such a small
amount. Come back to us when we need 20 million.
Wow.
I know.
20. Okay, great. Linda, weigh in here because some people, a couple of $1 million is not much.
I feel compelled to respond to Nicole. We're not big horrible monsters that don't finance small businesses. Actually, we do. So maybe let me just give a couple of examples in terms of what IFC does. So yes, it's very difficult for us to finance small projects because of the way we structured and the way we approach projects. It will actually cost you more than your project for us to finance you. So what we do instead is that we provide facility to local banks to finance SMEs. So I think what you should try and do is have a conversation with some of the local banks to see, what facilities are available for them to avail to yourself. I think the missing ingredient as well is local banks. Local banks are parking money in treasury bills. That's not a good use of capital. They should be putting their money into infrastructure. We talked earlier on about the fact that there's no local currency financing. Well, of course there isn't, because it's all sitting in treasury bills. So now if government put in incentives and regulations for some of the local banks to put their deposits into, or at least use some of their funds to finance in local currency, you will find that it actually becomes affordable, and also the banks would be able to provide financing to some of the smaller institutions. And then one last point, we are working right now on how to scale up mini-grids, because we do realize the importance of mini-grids in the whole scheme of things. And it's a coupling of private sector financing, concessional financing, everything, and actually different structures that take into account the fact that sometimes you're targeting a poor rural consumer that will not be able to pay a significant amount of money. So how much concessional funding do you need to put in there to make it bankable? Because at the end of the day, you, Nicole, want to be able to make a return out of your investment, right? So we are trying to do some stuff there in that regard.
Yusuf, you're the banker. Sounds like Nicole needs to speak to you.
Yeah, absolutely, of course.
I mean, let's talk about how you would, I want to hear about how these relationships are built. So Nicole has an idea, you have the money, we've got Binta who can draw up the contracts. How do we make this happen, you know?
Well, actually, it happens already in cases.
Yeah.
The question is how to do more, how to get more projects on track. This is really the issue. You're right. Banks today are putting more and more money on treasury bills. If you do like Central Africa, it's true. But we need projects. We need building also the capacity, and to get the projects structured and able to bankability. And that's where multilaterals can help in some cases. We need to build capacity together. We develop also some advisory in the loop that is needed in some cases to help the bankability project, and the advisory is also needed in many cases.
Thank you, Yusuf. Do you have to go now? We're going to open to more Q&A. Are you good to stay, Yusuf?
Yeah, of course.
Okay, so we're going to open to more Q&A. I'd like to welcome back Binta. I think Binta is still with us, if I'm not mistaken. Let me just double check that I have not made a mistake. And then I also think Mokeka is with us as well. Okay, so I'm going to pose some of the questions that we've got here. Okay, so the one question from Tom Anderson, does the lack of project scale, suitable size due to smaller markets limit absorption capacity barriers to trade and increase costs, and in turn hinder interest for taking on leading edge, innovative and competitively priced projects? Who would like to answer that? Nicole?
That was a lot. Can you go through that again?
Yeah, it was actually reading it as well. I lost it. Okay, wait. So the question is, let me just try to find it again because I scrolled down. Let's try go back to that one as soon as I find it again, because there's so many questions that are coming through. The one question that has come through, why is funding only for installations and not for real equipment manufacturing? Because I believe for the market dynamics to be controlled, we need controlled production dynamics in the African context. Nicole?
I actually think it's a really interesting question, and one that I think that there's a real opportunity to produce solar, to produce batteries here on the continent. One thing that's actually interesting about our business is that we actually do everything we can to bring as much of our value chain locally. So what a lot of solar projects will do is that they will bring a container that's already prefabricated from some other country into Africa, whereas we've got our team who is entirely African. We're building powerhouses with local masons. But one of the unique things is that we actually also make our smart meters here in Sierra Leone. So, and the people who make them are rural women who are illiterate, or at least were. We really have a focus on bringing as much of that economic development into the continent as possible.
So here's a question on the African Union. This is from David Mwanda. What's the African Union plan for green energy on the continent? Just as we did with the African Continental Free Trade Area, the African Union needs to be fully involved in this to see green energy projects finally be done on the continent. Who would like to talk about that? You make me, okay, Binta, thank you for that. I was going to pick, go for it. Just unmute yourself, thank you.
Yes, I think I can try. I'm not a representative of the African Union, at least not yet. But I understand that they have the 2063 agenda, which is a big program to drive the economic development of the continent. And they have also this initiative that is hosted by the African Development Bank on the renewable energy, on renewable energy initiatives. So they mainly work on identifying projects, bankable ones, on the continent to be able to accompany these developers and help them find financials.
Thank you so much.
I understand correctly.
Okay, we've got a lot of questions coming through. I'm sorry, I'm trying to get through them as quickly as possible. So a question from Abu Bakr Diakite for Yusuf about project financing. Is the IRR of IPP projects realistic for public authorities to reimburse the debt? So the internal rate of return.
Well, actually, what we are trying to do is to get more private developers in the loop and to get IRR for those private investors. For the public authorities, it's a matter of offtake and securing the budget is available to match the offtake requirements of the contract. So that's where the governance comes. To make sure that all the obligations of the public authorities are met regarding the contract. That's what we see in some specific cases. But of course, the incentive is to transfer all the capex and all the investment costs to the private sector and to get the projects done.
Thank you so much. A question from Joseph Mbui. Why is there such a lack of interest into African solutions, for example, mobilizing the informal and informal nationals owned, which might be in accounts abroad in savings? Is there a profound mistrust in the system? Linda?
Actually, no, I don't think that's the case. In fact, we were having a conversation the other day on how do we actually tap into the diaspora and actually, find a sort of formal and organized way of actually, tapping into that funding, because there's quite a significant amount of funding that comes from there. And I think there's definitely thinking around how to actually formalize that. So it's coming in my view.
So I want to go to the poll answer. Sorry, Yusuf, did you want to interject there?
Yeah, I wanted just to add a point, because the banking model can come here and bring some additional liquidity in the system. For instance, as a Pan-African bank, we can address the migrant flows from Europe as we do, because we have a European base that targets the African migrants living in Europe and channeling their cash to their accounts in the African countries. And so we get some liquidity that is coming from there. That's very important, and transfers are then channeled into the projects. So this is also a global contribution of what can commercial banks bring as additional liquidity into the system. Yeah.
I want to go to the poll answer, because I'd like to perhaps end with that and then get you, Mokena, to comment. So can green infrastructure bridge Africa's infrastructure gap? 68% say yes. Mokena, do you think, through your research, do you think that's a possibility?
I absolutely think it can. And I was really heartened to hear not only the conversation, but some of Nicole's points, particularly with regards to the importance of microgrids and the fact that you can have local production using local resources. In my opinion, I think the green infrastructure not only allows us to bridge that gap, if you will, but it actually also deals with other broader issues such as social inclusion, such as broader impacts from a developmental perspective, and more importantly, creating more green livelihoods. So I think it's an absolutely essential point that we need to build in, and I think it's a no-brainer, frankly. I think it works. If we can find good connections between capital, between ideas, resources, and partnerships, which is one of the points I mentioned in my last slide, I think there's an incredible opportunity to not only address these gaps, but for Africa to really get onto a very different type of industrial trajectory, which could be amazing for the planet.
So, Nicole, one question to you from Ben Bowie. A key challenge for smooth green infrastructure development is winning social license to operate for green projects, or approval and support in more plain terms. This is particularly difficult in many African countries. What are the best solutions to this problem? How do you get in short? So, Ben, I just summarized it. How do you get in?
Be a good salesperson. Show up. Be nice, and then be a great partner. And I mean, that's
okay. We're losing Nicole there, but we have to be nice and create and be a great partner. I lost you there, Nicole. But I'm going to start wrapping things up because we're running out of time, and I want one last comment from all of you. We are approaching COP. We are trying to get more African voices on the table. We want to be part of the global regulatory framework that's been put in place. The continent wants to industrialize. We have incredible opportunity. So I think in closing, if you could just tell us what your thinking is. In the time of a pandemic, we've reallocated resources and priorities have shifted. How important is this space for us? And Yusuf, I'll start with you.
Well, thank you, Eleni. Great opportunity, strategic momentum for the continent to engage massively on the renewable space, mobilizing the local actors, getting the domestic capital injected into the projects, and getting engaged with the public authorities into a very intensive dialogue in order to make the projects viable and bankable.
Fantastic. Thank you very much. Nicole.
I think energy is the catalyst for everything. And so most countries have tremendous priorities. Without an energy infrastructure, all those efforts will at a minimum be thwarted, if not, at a minimum be more challenging, if not thwarted. So yes, lots of priorities, but we need to stay focused on energy. Yeah. And Linda, I do believe it should be largely clean.
Fantastic, thank you. Linda, I'm giving the last word to you.
Thank you. I think Nicole stole my thunder. I was going to say the same thing, that I think without energy, we are kidding ourselves because development is not going to happen. We really do need energy to underpin going forward. And we have an opportunity right now. There's new technologies, there's digitalization, there's innovation of models, there are PPP structures that are coming up that we really should tap into. Let's use all of our resources to drive this continent forward, and we can do it. Thank you.
Absolutely. And I mean, it's so encouraging to see that so many people joined us today. It clearly is something that is on top of everyone's mind. And clearly we have investors sitting on the sidelines waiting for opportunities. So that's very encouraging. Thank you so much to all of you for joining us, for your insights, for your time and the passion that you're showing. It is truly phenomenal. And I cannot wait to cover some of your stories on CNN. It's a space that I'm also very passionate about, and I've been seeing incredible momentum. Listen, you're talking about no one's touching coal right now. South Africa still relies on coal for 85% to 90% of its electricity supply, but yet I'm speaking to companies like Sasol, and they say they want to transition. So I think momentum is happening in the space, and it's an exciting one. So thank you very much for that. We have many webinars with the African CEO Forum and the International Finance Corporation that is going to be coming up in October, and of course a lot of other digital events that you have to look forward to in the next 2 months. You should join them. The Africa CEO Forum puts together incredible conversations with the best voices on the continent and around the world. So we look forward to welcoming you to those conversations. And you should especially look out for the topic infrastructure partnered with the Africa 50. So lots coming up. Thank you very much once again, and I hope to see you soon. I keep saying this after every virtual discussion. I hope it's in person next time, and I hope that happens very soon. So sending you all my best wishes, and thank you so much for joining us.
Thank you very much. Thank you, everyone. Bye-bye.
Thank you so much.
Take care.
Goodbye.
Thank you, everyone. Goodbye.